trends? What were the key takeaways for you, the top 5?
Well, if I have to sort of summarize, one thing is that the companies are far more bullish and the investors are far more skeptical, right? So that's a clear disconnect over there. But if we go to sectors, for example, you would assume that in a rising interest rate scenario, you would expect banks to be more cautious. Our understanding is that most of the banks are slightly more bullish in terms of the credit outlook. You probably have the best cycle around asset quality that one could hope for. Uh, we believe that the manufacturing seems to be certainly in a different sphere altogether, especially the EMS companies, even the infrastructure companies. So broadly, there are a lot of new companies, a lot of small and mid-cap companies. It essentially tells you that the India Inc. seems to be on the right path in terms of the outlook on the growth, in terms of the profit, in terms of capital productivity. You could have minor, software, for example, stands out that, they continue to be slightly more cautious in terms of outlook. Uh, Outside that, I think, barring, few sectors, the mood was fairly robust within the corporates for sure.
Okay. Okay, got that. Nirav, thanks a lot for joining us. This is Pavitra. If you could just get a little bit more into, some of those calls. I know on technology we have spoken before, but take us through how it's looking now because, yes, we did get those severe guidance cuts after Q1. There is, of course, global nervousness as well, but a lot of the stocks seem to have come off the low significantly. Do you think the worst is in already for technology, and from here, perhaps it could pose a good buying opportunity?
Yeah, so I think we've got a slightly non-consensus view over here. We are fairly optimistic in terms of the investment prospects in software, and I'll tell you the reason for that. It is largely a macro trade, right? So you need to be slightly more bullish in terms of how the global economy is going to play out. We believe that even the recent backup in yields that you've seen in US is largely a function of better economic data rather than poor inflation prints, which means that real growth is higher. We have no doubt about it that the real investment in software is going to be a macro trade. If you are going to look at micro development, which is in terms of what the clients are going to tell you, I think you'll be late in the game. I think our understanding is that you will start seeing slight upgrades in earnings starting from Q3 and almost certainly by Q4. If our assessment is right, then probably the stock price will start reflecting somewhere right now. So I think we are in a very, very interesting space. That's number one. Essentially saying that, how fast the macro developments globally will start reflecting in terms of the micro outlook for the software companies. But you also have to keep the valuation context in mind and where the Nifty is and related to that, where are my valuations for the IT sectors. Both these things in context gives a very strong, makes us fairly bullish on the sector.
Okay. Nirav, stay on. Want to talk to you about some of the trends we're seeing in the broader markets and this huge rally that's playing out. But before we get to that, the anchor lock-in period for a lot of companies that recently listed, over the last 12 months or so, that anchor lock-in period is ending for several of them. In fact, for the recent listing NetWeb, the 1 month lock-in is ending today itself. We have Horma standing by to put all of this in perspective. Horma.
It's almost kind of nostalgia, right? Because sometime during October and November last year, there was a slew of companies that had their lock-in periods ending around October or November. And it's happening, the same thing is happening this year as well. Now, as per a Nuvama note, there is a total of 37 stocks whose lock-in period is ending today, but is ending starting today until the 31st of December. But more than the 37 companies, what's more important is that 227 crore shares will be eligible for trading once their lock-in period ends. Now, this lock-in periods range from 1 month to as long as 3 years. But I'd like to begin on a different note, and I'd start with India's largest IPO, which is LIC. And that's because out of the 227 crore shares, 126.5 crore shares belong to LIC. And those will become eligible for trading once their lock-in period ends on the 13th of November, which is when it will complete 18 months of listing. Now we'll move on to the original, the recent listings. And as you mentioned, NetWeb Technologies has the lock-in period, the 1 month lock-in period, which is opening today. And that stock will have 20 lakh shares opening up, which will become eligible for trade. And the others in the list include Yatharth Hospitals, SBFC Finance, Concord Biotech, which is backed by the late Rakesh Jhunjhunwala. And they will have their lock-in periods ending anywhere between the first week to the third week of September. And of course, these same stocks will have their 3-month lock-in period also sometime during October or November. But besides these names, a standout in the 3-month lock-in list is going to be Utkarsh Small Finance Bank, where 4.5 crore shares become eligible for trade once the lock-in period ends on the 16th of October. Now we move on to the 6th month bid, and in this list, more important than the number of shares, it's the number of
Are you incurring losses in this stock market? You earn some profits and then lose it?
the percentage of outstanding shares that take center stage. And another standout in this list is Mankind Pharma, and shares have almost doubled from their